Hello traders and welcome to another video review. Today is Tuesday, April 25th, 2023. Let's take a look at the Forex calendar for today. As you can see, during the London session, we don't have too many important data to review. We got ECB Arena to give a speech at 10 o'clock. Then we have the Bank of England MPC member Broadbent to give a speech at 11. And at the middle of the day, we got the CBI Industrial Trends orders from the UK. During the New York session, we got data scheduled for release at 3 p.m. S&P CS HPI Composite index, then 30 minutes later building permits. As you can see, building permits are expected to decrease from 1,550,000 to 1,413,000. Then we got CB consumer confidence and new home sales. Both of these data are very important, and they are scheduled for release at 4 p.m. At the end of the day, 10:30, we got API weekly crude oil stock scheduled for release as well. So, pretty intense data in terms of the data releases New York session. So we will definitely take a look at some USD related pairs, but let's start with euro dollar. The euro dollar is approaching the last swing high. As we can see here, we just moved towards this level here. Let me just point it out for you. This level here, which is 1.1076. This is the last swing high. So our plan for the A, B, and C to the downside didn't work, as this wasn't apparently the wedge, or it wasn't any kind of a triangle pattern. This pin bars here with the long down shadows were first indication that the bulls are buying the dips, trying to move a little bit higher. So we are approaching this swing high. The market is very strong in terms of the momentum. Momentum is positive, is a strong momentum, but the question remains whether this momentum is not the extremely overbought already. So right now, despite this effort here made by the bulls, we still can expect the breakout, but then some sort of the pullback should be expected on the euro dollar market. Overall, the euro dollar keeps trying to make another swing high. This movement to the upside is still in progress. So as long as we trade above 50 and 100 periods moving average, and the price keeps bouncing from this moving averages, the up movement is intact. Let's find out what's going on the US dollar index. As you can see, 4-hour chart of the US dollar index is showing us that it was very difficult for bulls to break above the 100 periods moving average. We have series of candles here, as you can see, upper shadow, upper shadow, upper shadow. So every attempt to bounce and rally was basically a failure, and finally the market broke below this level here, which is the technical support, 101.61. It broke below this level, and of course hit the local low at 1.0117. So this is now the local technical support, but it looks like we are heading towards the level of 176, which is the low from the April 14 made during the extremely oversold market conditions. The market conditions here are negative, strongly negative. Bears are in control of this of the short-term market, and it looks like again the 50 and 100 periods moving average is the gateway to the up move, because only a sustained breakout above this level would open the road towards the higher levels here. So the intraday technical resistance, not only intraday but general technical resistance, is located at 102.9 20. So that's the US dollar outlook, general weakness of the US dollar across the board. So how does the gold react on the US dollar weakness? So if there's a US dollar weakness, the weakness for our chart of gold doesn't actually looks that much bullish. Again, we broke below the 50 and 100 period moving average, and every time we try to bounce, there was failure here, right? 3 times they tried to bounce above the 50 periods moving average, then it moves, then the gold moves even below the 100 periods moving average, and it still trades below this moving average. So right now there is the moving average play across the board of the gold markets, and it looks like the negative momentum, the weak negative momentum makes this movement to the upside much more difficult. So however, if this level here 1968 is violated, then the next target is located at 1949 and 1943. So we might have another extension to the downside, maybe, just maybe, in the form of the corrective wave. So we got the top here, we got wave A here, wave B is developing, and we are missing the wave C to the downside. So it looks like the bears are still making pressure, or bulls, they are still winning somehow, and they want the market to move way lower than it is right now. So that was the gold. What's going on the US dollar to the Japanese yen? In that situation, we got this movement here on the US dollar to the Japanese yen. Very nice movement to the upside. The local high was made at the level of 135.14. Since then, of course, we got the downside movement towards the 50 periods moving average, slight bounce. Nevertheless, we still trade below this local trend line. So the bulls tried to break above this trend line. They didn't actually have the momentum to do it. So as long as the market trades below this trend line, the outlook remains bearish, especially that the momentum is already neutral. Maybe the level of the 130. Let me just take the magnet. 133.56 will provide some support, but if it's violated, then the next technical support is roughly around the level of 132.03. So that's far away from this level. 150 pips might the US dollar to the Japanese yen travel to the downside, of course, if this moving average level and the last swing from the 21st of the April swing low from the 21st of the April is clearly violated. So then the bears will break to the negative zone on the momentum, and of course new lows will be made without more of the problem is still this movement here, because it's overlapping the swings are, as you can see, are being made here. Okay, swing high, higher high, higher high, higher lows, but they are overlapping, which means it's not impulsive in nature. It's more like corrective swing. Even if we apply some sort of the let's say a parallel channel here to this market, let me just move it higher. We are still, as you can see, this is still like a corrective channel. So we are moving to the upside, but we are moving like inside of the corrective channel, which doesn't mean there will be some kind of a bigger up move here in the nearest future. It doesn't look like there is some kind of a bigger up move here in the nearest future for the US dollar to the Japanese yen, especially if the US dollar index is moving lower. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.